A lot of interesting things going on in the market today. I didn't pay attention to any of them because I had my head down deep in the charts looking at underdogs. In my last video, I talked about the fact that one of the biggest market cap companies, tech leaders in the world, Apple stock, actually found itself in the underdog camp in recent days, and that I suggested that it might be the very best buying opportunity as far as the big Magnificent Eight are concerned for the month of July. And I said that all we needed was a price action move above $204 on a daily time frame to confirm that this is actually going to break to the upside. There's still plenty of risk. Now, today, we got that move. We got a beautiful little breakout of some structure on the charts, and I'm going to actually re-examine Apple stock, but I'm going to keep it in the category of underdogs that you might want to be buying or looking at in July of 2025, this up and coming month. Now, the category that Apple finds itself in is the company of stocks like Lululemon. This is one that a lot of people asked me to look at because they think it could be a turnaround story. And then, of course, Nike, that's been falling for quite a while, but the one that's been falling the longest is Enphase. Now, I spent so much time comparing these stocks from fundamental perspectives to what is the smart money doing, investment flows, unusual option chain. I went into the charts. How are the moving averages stacking? Are they stacking on top of each other bullishly, or are they an upside down stack of descending moving average lines? Well, we looked at volume. I looked at everything on these four companies today, and I'm going to rate them and give them to you and tell you which one out of the four, Apple stock, Enphase, Lululemon, and Nike, which one rates the best potential buy. We can take a peek at what institutional money is doing. I took a look at the charts and broke it down in a lot of different categories. I think it's going to be educational. It's going to be a little bit of maybe a small micro charting course today, and just how I looked at these. Some of you guys would find it very educational. This, my friends, is the Stocks with Josh show, and I appreciate you joining me. I thank you for smashing that like. I thank you for all of the hearts that are dropped in the comment section. I return those hearts to you, and I appreciate all of you guys. Today in the Stocks with Josh Pro Trading community, I dropped my A-plus trade setups. These are used every single day to enter or exit scalp trades on typically the SPY, NVIDIA, and Tesla. Now, today was a choppy market, and I live traded with the community. We got a couple wins. I took a couple small losses. Some days, they're not breakaway winners. I wanted to highlight that if today was a difficult day for you, don't be shocked by it, because we've come to some all-time highs in the market, and things are getting choppy. The market's trying to figure out direction. So all morning long, things were sharply spiking and then dropping and then spiking again. It wasn't trending. Now, later in the day, it's been trending. Now, I mention this because change is coming. The market's shifting. We're still holding the highs, but that can shift at any given moment. And if you remember, I said that eventually when this market did cool off, there's going to be some rotation. There's going to be some profit taking from companies like NVIDIA, like Palantir, and some that have been absolutely rocketing. We saw Circle Investment hit an incredible high that many of us didn't imagine it could hit, but money's going to be taken out of these hot growth stocks, and they're going to be rolled into some stocks that are called value plays. Why are they called value plays? Because they're down on their luck. They've gotten cheap. They got sold off. They might have gotten oversold, and they might be underestimated. That's what we're going to be looking at today. Guys, thank you for hitting the like and hit the subscribe if you need breakdowns like this. I do it every single day. And don't sleep on the Stocks with Josh trading community. I gave some alerts there recently. I talked about Ondo just over this last weekend, and it ripped to my target. I just alerted there a moment ago on Ondo again. I can't turn this into an altcoin commentary. All I can tell you is that it's been very, very tricky to be in any of the altcoins. But as of this moment, as you guys are hearing my voice, the altcoin coins, some of them, the ones that I like, they're looking pretty good still. The charts are somewhat pointing to more of an upside from here. I'd love to hear from you guys. Are you holding on any alts? Are you scared of the alts? Do you think we'll ever get an altcoin season? It's going to be an upcoming video. Matter of fact, I'm going to be meeting up with Mark from Tribal Trades, who's in my neck of the woods. And we're going to be doing a video together potentially here, maybe tomorrow. Guys, keep an eye out for that. It's going to be an interesting show on what's going on with the altcoin season, with a special focus on, is there going to be one, or is it in the rearview mirror? All right, let's talk about how smart money is investing. This is unusual options activity. I'm going to roll through these real quick with you guys. We're going to start off with Apple. I'm going to give you a basic trend strength. Now, don't get confused, because we're going to break down and compare these. And in the end, I'm going to give you the big picture view. Apple right now, the trend is bearish. Okay, so even though we've had a little spike today, the overall trend is clearly bearish. You got to remember that the number one discipline is the trend is your friend until the very end. So we need to be mindful that the current trend for Apple is that it's bearish, but that bearishness is weak, which doesn't mean that the price or the price action is weak. It means that the bearish trend is weak, and that often happens right before a reversal. Now, the largest trades on in unusual options is actually for a bullish move to the upside. They bought these on June 30th, today, with the expectation of the move being hit by 7/3, right before 4th of July. Now, in addition to that, who's buying this and who thinks that it's going to be going up? Is it the retail or is it the institutions? Well, it's institutions who are favoring call options on a 1.4 times basis. All right. So there's basically a higher percentage of institutions are betting on this going up in the short term. Overall, even though institutions are betting in the short term that Apple's going up, the overall positioning is that people are still more hedged for risk to the downside. 45% are bullish, 55% are still hedging perhaps their Apple position with some puts. So just be mindful of that. Now, coming in, number second is end phase. The trend is bearish, but it's also a weak bearish trend, which means that the bears are getting exhausted on end phase. Now, the largest trade in the short term for end phase is actually still bearish. There's a $0.3 million position for puts that are expiring here at the end of the week. And having said that, even though the short-term positioning on end phase is bearish, institutions are favoring call options by 1.3x. And so what's interesting there are still more people positioned for end phase to pull back in this week that we're in, but they're not primarily institutions. The overall flow on end phase is only 39% bullish and 61% bearish. The context for what we're talking about is the unusual options activity and how smart money is positioned and how people are positioned overall for a move in the stock in the short and long term. Now, Lululemon, LULU, it's bearish and the positioning is strong bearish. So the bears are not exhausted on Lululemon, okay? Now, it doesn't mean that we're not going to see a little tick up before we ultimately get a bigger move down, because that can fake you out. You see it, it's down on its lows. You're looking at underdog stocks and you're thinking, well, this one looks like it's turning around back to the upside. Well, that's not what the flow shows with Lululemon. The overall flow on this particular trade is showing that institutions are favoring puts at the level of 2.4x. So basically 240% favoring puts to the downside. Institutions are betting that Lululemon is going to continue to go down strong. And those bets are over a longer period of time, which means that they're not afraid of the little blip moves to the upside. They believe that the overall direction on Lululemon is going to continue to be to the downside. And then we've got Nike. Now, this is the only one that falls into the context of actually being in a bullish trend, having previously been in a bearish trend it's now positioned itself in a bullish trend, but that bullish trend has not picked up a lot of steam yet, and so it's weak. We've got a bullish move on Nike, but it's considered weak because it doesn't have a lot of momentum yet. Currently, the largest trade in the short term for Nike is still bearish, with more puts that have been put on that are expiring here at the end of the week that were put on today. Overall flow is 42% bullish and 58% bearish based on all of the options in a 12-month period. So the number one stock out of these four for institutional interest, well, that falls to Apple with $4.6 million in calls. They've got clear conviction that Apple stock from the institutional side is oversold, and it's the underdog of preference or choice by smart money. And when it comes to smart money's position in Lululemon, Enphase, and Nike, they're still hedging their position with a larger position flow in puts. Keep that in mind. Now, which one had the largest position overall of calls, both retail and institutions? Actually was Nike with a 3.2x more money in calls than puts. And the one that had the largest overall interest in puts was Lululemon with 2.4 times the amount of money in puts. Overall, most bullish when it came to options for flow and volume were Apple and Nike, and overall the most bearish at the moment when it came to option positioning was Lululemon and Enphase. But this is not over. We got to look at the charts because I think you'll find that when we're done, these are going to be in a priority order different than I just gave you. Now it's time to look at the world of charts. These are the four categories that I use to analyze the charts. Specifically, I looked at the trend, but we used moving averages and how they were stacked to determine the strength or weakness of the trend. After that, we looked at the momentum indicators such as the MACD and the RSI. And most specifically, we were looking at whether or not we had a cross up or a buy signal on the MACD on the daily time frame. And then we looked at volume. Now, each of these has a different story to tell. And it's when you start looking at volume that some of the underdogs all of a sudden become more interesting. Even though there was hedging for puts on some of these, the fact is volume was indicating some stealth buying on one of them that I think you're going to want to know about. And so volume was our third category. And then we had to look at structure, support and resistance. How close was the price action to resistance? How close was the price action to support? Where is it going to likely go next? Will it pivot high or low from here? Those were the areas that I looked at, so let's begin to break them down. We're going to start with the trend. Okay, we're looking at Nike, and I want to point out the moving averages that are on the screen. The red one is the 20 EMA, the orange one is the 50, the blue one is the 100, and the yellow is the 200. The price action is right above the 200-day moving average. And down here, we're beginning to get the 20-day EMA cross above the 50. This is called bearish stacking when the price has been beneath the lower time frame moving averages and the higher time frame moving averages are above and they're all spread apart and pointing down like this. This is called bearish stacking of the MAs. But you can see that price did a jump. It pushed all the way from beneath that 20-day EMA all the way to the top above the 200. And so as far as the moving averages and the trend, Nike's got the strongest reversal action of the trend. Now we're going to break down the rest. Let's jump into Apple next. Now Apple's going to be number 2, but you can see the price has got to jump quite a bit to get Apple into the same spot that Nike is. Apple would have to get up above $214. And personally, after I told you guys that this was a buy, if we crossed above 204, I think that's where it's going. But for the time being, you can see that the 20 EMA, which is the red one, is beneath the orange, which is the 50, beneath the blue, which is the 100, and beneath the yellow, which is the 200. And that's bearish stacking of the MAs, which confirms a bearish trend. It's not until we get the price to jump above the 200-day moving average like we saw with Nike that we are signaling a trend reversal could potentially be at hand. Let's go look at Enphase. Now, Enphase is actually doing pretty poorly here. As of right now, when it comes to the stacking of the EMAs, the price for end phase is currently beneath the 20, whereas the price for Apple and Nike was above the 20. Nike was all the way above the 200 and Apple was above the 50. But you can see that end phase is not doing too good because the price is still trending, stair-stepping down beneath the 20, and the 20 is beneath the 50, and the 50 is beneath the 100, and so on. And that's the bearish stacking EMAs for you. The last one that we want to look at is going to be Lululemon. And this is where it gets even worse, because not only do we have that same bearish stack going, but these are fanning out, which means the distance between each is growing wider and wider, and price is significantly beneath the 20. This has obviously been on a very strong downtrend, and it is yet to even come back and backtest the 20. And so there's no sign or signal on Lululemon just yet that this is reversing, because price is significantly beneath the 20, which means it's in a strong downtrend as we speak. Now, there's some people that try to catch falling knives, or they try to guess the bottom. That would be very dangerous right now on Lululemon, because this pullback has been one that's been clearly driven by institutional sellers. Now, we're going to get into volume, which proves that here in just a minute, but you can take a quick glance down and see all of these strong red volume selling nodes showing that this has been institutional sellers trying to unwind their position in Lululemon. They're not yet ready to begin to buy this back up. That's not seen in the charts just yet. Now, the next category I'm going to go over is momentum. And you look at momentum through indicators such as the MACD, the RSI, or the stochastic RSI. I'm only going to look at the momentum indicator, the MACD, and we're going to give it a very simple gauge of whether or not there's a buy signal. And you can have lots of buy signals in the MACD, but one of the strongest is simply on the daily time frame, when you begin to see the MACD line and the signal line cross above the 0 line. It means the bulls are winning. Let's go see what kind of MACD cross-ups we've got on all or any of these. Let's see what the MACD says. Let's go check that out. All right, we're going to look at momentum here, and we're going to look at the MACD in particular. And I just want to point out to you that we do not have a buy signal on the 1-day time frame. A buy signal would be constituted if this blue line crossed above this 0 line. But here's the thing I want you to see is that these green bars are increasing because the momentum to the upside and that potential crossover is slowly building. Both the blue MACD line and the orange signal line are both pointing straight up, indicating that Apple might soon signal mid-term buy signal upon that cross. Now, an early indication of that is actually the RSI down here. When the RSI remains underneath the 50% level, that typically means that the momentum is in the hands of the bears. And when it crosses above the 50% level, it means the bulls have seized control. And at the moment, we are above the 50% level, which means that we have seen a shift where the bulls are beginning to lead again on the Apple stock. Now, if we jump over to end phase, we have a very different story. We don't have a strong bullish story when it comes to momentum. Largely, this is very, very neutral. The only thing that we've got going for us here is that while price has been stair-stepping down, momentum has been stair-stepping up. And it is increasingly closer and closer to the 0 line. And if you choose to buy this only after you get the buy signal, you'll rest at night knowing that you've got some confirmation, but the price would likely be somewhere north of $50. And right now, we have the opportunity to pick it up between $35 and $40, which could be a great value buy. I want to point out that the RSI is still showing overall weakness, but even there, the story becomes interesting, because we are seeing that as the price action continued to move down, momentum on those selling days has decreased. Each and every week, the bears have lost more and more control over the direction of end phase, and slowly but surely, the momentum is giving some signals and clues that price will soon follow and the bulls will be back in charge. Now we've got Nike, and Nike is that outlier out of all of these stocks because it's already given a very strong buy signal on the MACD. And it didn't happen yesterday. It actually happened back here at around May 14th and then at May 21st when the price was right around $59.80. This is when the momentum built and crossed above the zero line. And if you had been paying attention to it and buying in this price range around 60, you would have enjoyed this fabulous pop all the way up to $74 and some change. In addition to that, the fact that there is a clear buy signal here in recent days in the last couple months here on Nike. From the momentum perspective, you can see down here the RSI has flipped back then in May as well. It used to be beneath the 50% level, and now it's been above the 50% level, which means that overall momentum has largely been in the hands of the bulls on Nike for quite a while, and ultimately price caught up with that and exploded to the upside. Then you've got Lululemon. Now this one tells a very different story. We are seeing that we are not just a little bit away from the zero line, we are really far away. Now the bulls will say to you, but Josh, you're getting a cross up of the blue line above the orange line. The problem is that there's a lot of factors that go into momentum, and this could simply be a momentum reset for another leg down, which is often something you see. Now, if we go back in time, we also had a cross up right here when the price was right there, but all that happened was the price drifted higher from 312 to 340. It drifted higher, but it gave a much bigger move down from 350 all the way down to 240. So this was well over a $110 drop, and that is a bit more similar to what's happening right now. This could be setting up for another move to the downside, and I can tell you where I think it'll go. I think it's going to go to $200. So I see momentum on this chart differently than the other three. I see this as a potential momentum reset for another leg down. Now, our next category is a look at volume. And because this is perhaps after price, the second most important indicator to be watching. And here's what you take away from it. Obviously, if price is going up, you're making money, it's green, every dollar is expanding and becoming $1, $2, $3. That's awesome. But you look at volume to determine whether or not that uptrend or that downtrend is going to continue. In the charts, I think I found some stealth buying on one of these that means that the reversal could be very, very soon. Let's go look at volume in the charts. All right, we're going to kick things off with the leader of stealth volume, which is end phase. It shows the clearest signs of institutional accumulation. A massive green volume spike. It emerged when the price was down here on its lows. So the lowest price on the chart got the highest volume node on the chart. That screams of institutional accumulation. When the selling was accelerating, they were buying. Now, I want to make a point about how you use volume in investing and trading. When I'm doing day trading or scalping in the morning time, whichever volume node is biggest on the day and it's bigger than the previous 3, 4, or 5, typically tells me that the trend is going to continue in that direction. So if it was a great big green volume node and it was bigger than the previous 3 or 4 or 5 volume nodes, it means that the bulls are getting ready to push the stock price up. Now, I want to make this point about end phase because it's the most important bullish part of the end phase chart. That volume node was the biggest volume node, not in the last 3 or 4 or 5 days, or even the last 3 or 4 or 5 weeks. It was the biggest volume node at the lowest price of the stock in over a year, 365 days. That volume node wins, my friends. It's the most important technical that I've got in all of these, and it pushes end phase up the charts into a more bullish category, which I'll give to you at the very end, what my top picks are and what my views of all of these are. But that's the most important technical on any of these, that volume on end phase. All right, let me get back to volume. Okay, and then we've got Nike, and Nike, this volume node down here You can see it's much bigger than the previous days, and it confirms a breakout. It's a breakout confirmation of volume. Nike saw a huge volume surge on the post-earnings breakout candle. This is a textbook sign of institutional confirmation. Now, the reason why I have still some caution with Nike is only that after we got that volume node, we've actually seen a slight drop in follow-through volume. What does that tell us? It tells us that the price might have gotten pushed up too quickly as institutions began to fight over getting back into Nike. They took a step back and let this thing cool off. However, I'm going to tell you that the verdict is that is a solid volume breakout node, and it is, in my opinion, the second best volume setup that I've got to go over with you guys. Now, let's look at Lululemon. Lululemon is the true underdog, and because it's really not showing much bullishness, not in the unusual options and not in the charts. It's got the weakest bearish volume. Lululemon, unfortunately, is showing heavy red weekly bars aligned with the breakdown candles. So you've got, this is a breakdown candle of price, and down here, it's aligned with a huge volume node. And you see the same thing here. These 2 days were a huge acceleration to the downside. It's aligned with these two very large red volume nodes. And recently we had another leg down, making a lower low, and it's also aligned with these days of high volume interest. And of course, this giant volume node back here right before the price hit this all-time high and then eventually went on to collapse. This was institutional selling into strength and a bullish market at the time. Okay, that's a lot to observe. The next category, I hope it'll be easy for you guys. And this one is basically support and resistance. Now, I'm looking for clear and obvious structure, which means this: how close are we to resistance above? How close are we to support below? What is the structure in the charts right now? I'm going to keep it super simple. Let's go back in and look at Apple. So with Apple, I'm just going to highlight this structure. We have a little bit of a bullish flag pattern that looks like this. And today's candle starts us off with a breakout to the upside of that particular pattern. These are often continuation patterns. And the way that you trade them is you simply take the flagpole distance and you put it at the top or the tip of the breakout, and it indicates to you where the price action could potentially go. And that is right around 230 to 240. This particular structure that's at hand and showing a breakout indicates that the price action, if we get a continuation, could push this up to 228 to 238 is my ideal zone. Now with Nike, I want to show you a different type of structure, because structure can be anything. Let me take you into the VRVP. This is the visual range volume profile. And I want to point out to you that there was this massive air gap right above 63.50 all the way up to around 74. But right now, you have this large volume shelf that Nike hit, which is going to take a little while for the bulls to chew through. And what that represents is this area of sideways price action where a lot of people began to take some long positions in Nike, and then they ended up getting trapped as this moved and flushed quickly to the downside. So at the moment, the structure that I see is that Nike price is up against an area of resistance that it won't easily break through. So that's what structure looks like on Nike. Now, to understand structure on N phase, we have to go to a very high time frame. I simply want to point out to you guys that we're dealing with some historic structure that N phase is sitting on. And we've got a little bit of a doji on a monthly time frame. Doji means indecision. It means a point in time where the price action between the bulls and the bears is being fought out because they believe that this is potentially a turning point for the stock. Price action on this chart between the $35 to $45 range is an area of historic significance that had been a ceiling of resistance that eventually got broke through, back tested, and was the beginning of this explosive move to the upside. And that's really what's happened is the story of N phase. It's completely come back to its beginnings, And the question is it now time for this to go on a long-term reversal move as the company begins to re-explore profits and its move to the upside? These volume candles here on the monthly time frame suggest absolute capitulation and the potential for reversal. Now, the last one is Lululemon. I'm actually looking at the monthly time frame chart, and I'm just going to tell you that there's a lot of air underneath the current price, which means that there's very little resistance if this wants to continue to flush. This is not the level in which a lot of people have been buyers. They bought up here for many, many years, and then the price action has begun to swing wildly into distribution, which means there's a lot of folks trapped up here. And the more this price drops, the more panic selling that will occur until we get down to a minimum of $200, which is a huge psychological level where this would potentially bounce next. The problem with structure on Lululemon is that it's broken structure, and now there's a lot of air beneath the current price. All right, we've got final thoughts on these four. I hope you enjoyed the journey through the charts and through the analysis of the unusual options. I'm going to break down for you what it is that I'm going to be doing with my money. This is not a suggestion for what you should buy, sell, or hold. The number one stock that I think is worth investing in for the long term out of these four right now is Enphase. Enphase, all because of that incredible volume accumulation. It's down on its lows, but it's had this moment in time in which institutions began to suck up and buy. Every single panic sell order got absorbed by smart money in the recent days. And even though the price action hasn't begun to reverse just yet, I want to explain to you a little bit something about this stock. The price action is down on the floors because these guys are solar power and they're heavily affected by interest rates. And we've had a Fed that has said that he's going to hold rates higher for longer. And that's why Enphase has dropped consistently since 2022. But I think that we've finally come to a very strong structural historic area. And with seeing that volume buying coming in at this level, I think that this is the perfect time for me to begin my accumulation journey. And what I like about it the most is that we don't have green candles. Sometimes the best thing to do is buy a red candle. Now, I've talked about Enphase many times, and I've told people to avoid it. It wasn't done going down. Well, today I'm telling a new story based on the technicals, based on the institutional flow of the options, based on the bets. This is one that I think deserves to be the top underdog turnaround story long-term investment. It is Enphase. Let me know if you have some Enphase, if you're happy to hear that, or if you think I've got it wrong. You say, well, Josh, I thought Apple stock was the best stock to buy in July. It is. Apple stock might have the best explosive move out of the Magnificent Seven or Magnificent Eight if you include Netflix. And so it could be the best big cap stock to buy in July. And it is an underdog. And its claim to fame in this analysis review is that it had the strongest institutional flow moving into the stock and betting on it going up for the month of July. So I think that Apple stock is still going to be a very good play for the month of July. But Enphase beat it because Enphase can go from $40 to $80 to $120. And all that I'm expecting Apple stock to do right now is to go from 204 to 228 or 240. So based on overall opportunity, Enphase beats Apple today. Not saying that Enphase is a less risky play than Apple. Apple got the institutional money because it is less risky than Enphase. There's a lot of things to be taken into consideration. After that, Nike has got to get some respect here because we saw that volume and we saw that reversal move, but I am concerned at how quickly the price went up, and the fact that there wasn't follow-up volume in my mind means that a lot of people were closing their shorts on Nike and that it's still going to have to make a base before ultimately climbing higher. I think personally, as I did an analysis on the fundamentals, $74 was a fair price for Apple, and that's what we almost hit as we came up. We got to 73.50 and some change, and from there it began to retreat. That might, for the time being, be the move. So I like Nike when it pulls back to $68, But overall, Nike's was more bullish in some technical indicators than any of these, including Apple. And then finally, Lululemon. What to do with Lululemon? I'm warned that the only reason why price is drifting up right now is because bearish momentum, which has been driving the stock down, is resetting for the next leg down. At least that's what I see in the charts. And unless the narrative changes, right, unless the story changes, unless the profit profile changes or something happens that nobody has seen coming, Lululemon is still facing a long-term downdraft of price action. I ultimately see it going sub $200 and hitting $198. We might drift up another $5 between now and the next couple weeks. And you guys will remember that I said that Lululemon was the most bearish looking of them all. And you'll think, but Josh, here we are a week later and this is a couple dollars higher. You must have got it wrong. No, in my opinion, we're going to be setting up for a potential opportunity to short this again. The price range for that would be between 254 to 258. If it gets up there, it's time to ride the roller coaster over the next ledge, which I believe will ultimately run down to $200. That's your big picture view for all four of these. I'd love to hear whether or not you like it, you hate it, what you think. These are the technicals as I see it. I appreciate you guys joining me today. If you want to get more deep dive analysis like this, hit the like and subscribe for me. And if you want to get more insights into charting and live trading with me, as well as my daily A-plus trade setups, then join my pro trading community, Stocks with Josh, Chart Goat University. The name of the show is also the name of the website, which is Stocks with Josh. You just add www.stockswithjosh and you can connect with me there. Appreciate all of you. Peace and blessings. Take care. Talk to you soon.